Real estate mathematics also factor into property taxes. In California, annual property taxes are based on 1% of the assessed value of a property, plus certain local service fees. Generally, this totals to approximately 1.2%. The assessed value of a property is based on the original transfer price, sales price, or the amount stipulated by court, such as in a probate action or divorce settlement. The values of any improvements made to the property are also added to the assessed value. The total assessed value increases up to 2% annually under Proposition 13. Prop 13. Prop 13 was voted in California's Constitution in 1978, capping the amount property taxes may increase each year. Prop 13 limits property taxes to 1% of the property's assessed value, but again, the property's assessed value may increase a maximum of 2% each year to compensate for annual inflation. However, it may also change upon a reassessment by the county assessor. A reassessment occurs upon a transfer of title. How about an example of these mathematics in the context of property tax? Consider a property purchased for $700,000. After the purchase, the new owner installs a swimming pool, which adds $50,000 to the assessed value. The next year, the tax assessor raises the value 2% as allowed by Prop 13. To calculate the current assessed value, first determine the base value by adding the sales price, $700,000, and the improvement, $50,000. Then, multiply this amount by the 2%, the increase allowed under Prop 13. Convert the percentage to a decimal by moving the decimal 2 places to the left, as discussed. Thus, the current assessed value is $765,000. Related, let's review the county transfer tax. The base county transfer tax rate is 55 cents per $500 of valuation. For values over $500 but less than $1,000, the amount of the transfer tax is rounded up. Several counties and communities charge additional fees. Transfer tax is a one-time fee paid at the time title is transferred and recorded. Let's frame this as an example. Consider a buyer who purchases a home for $650,000. The terms of the sale state the buyer will make a down payment of $200,000 and assume an existing first trust deed for the balance of the purchase price. At a basic rate of 55 cents per $500, how much will the transfer tax be? First, understand that transfer taxes are charged against new money only. Since the transaction includes the assumption of a $450,000 existing mortgage, the only tax charged is against a $200,000 down payment. The transfer tax rate in the county where the property is located is 55 cents per $500, which equals $1.10 per $1,000. Therefore, multiply $1.10 by 200, totaling $220 in transfer taxes paid on the sale. Lastly, for those preparing to take a salesperson or broker exam, if the exam happens to include a math question or two, the red herring answer selections have been known to be based on common math errors. If the DRE is aware of common math errors, such as an incorrect conversion, expect some of the distractor answer selections to be based on frequently miscalculated answer choices. And, of course, all practicing licensees are well advised to invest in a financial calculator which is capable of doing more advanced functions.